Hi, welcome to the market alert for Monday, the 11th of February 2019. So, Friday in the pound, let's just have a look at the daily chart. You can see there quite a narrow range below the 50 bar moving average, having broken the 200 bar moving average and developing a bit of a sideways move there, apart from the break to the downside there. But again, a defined sideways range developing. And of course, this is to do with the waiting game, 50 days now until D-Day, Brexit Day. And the market reflecting that with the indecision that we see at the moment. The market was sideways on Friday. The main part of the session, we saw some buying coming into the market. This failed to hold. You can see the indecision here. And then we sold straight through the averages, all three, and the 200 bar coming back through the 200 bar moving average there, but banging its head against the 50 and the 200, the 20, and also Thursday's close. The market then moving lower, double bottom retracement there before prices then broke back above and moved higher before then returning and heading lower there. So a bit of an indecisive day, not a great range for Friday's trading session either. You can see from the low to the high there, we just had the 54 pip range there for the pound. On the overnight, prices gapping lower. You can see this here, down to Friday's low. Markets moved up to the 50 bar moving average and Friday's close, and has retraced 76% and then moved back to the upside once more. So we'll just draw this in for you from this low to this high. You can see the market sitting on this level there at the moment. And of course we've got resistance across here also at the moment at Friday's close. So yeah, waiting for news. May said that she's now going to have discussions with Corbyn, so we'll see what happens. Meanwhile, in the news today, GDP figures have been downgraded. Carney said this on Thursday. He's blaming Brexit for this. I disagree, and I'll show you why I disagree. It is a factor, there's no doubts about that. It is causing some unease in the marketplace with regards to spending, housing, etc. But this is the main reason. The Baltic Dry Index, which is an index of the number of ships that are transporting goods around the globe. We've seen this before, but I haven't had a look at it for quite some time. And wow, you can see here globally, and also the trade wars with China and the US as well. You can see there is a marked drop-off in the movement of goods around the globe there. I'll just move this up a bit, and when you actually look at this on 5 years, we're now heading down towards those 2016 lows. So it's going to be very interesting to see whether things pick up here or not. The reason they picked up here is Trump was elected. It seemed to set a bit of a boom in the transport of goods, but since the trade wars have come into play, Brexit, and generally the global debt growing at a exponential rate and spending being cut, bankruptcies increasing by 16% in the UK during last year, credit card debt at its highest it's ever been, then there's no surprise that there's no money left to buy and imported goods and cheap goods. So yeah, interesting picture there. There's always a bigger picture. And speaking of bigger pictures, I came under fire on Friday by somebody in the comments saying that my opinion of the markets moving higher is reckless. I'd just like to clarify this. What I mean by this is, anybody that knows and has followed me for the last 20 plus years, we use the daily chart as a background to the market. And that means that we step back, we look back and see where the major trend is. And there's no denying that over time, if you look at the monthly chart, that the Dow is in a bull market, and it's been fueled by the QE money And this is precisely what we're seeing. Yes, we have pullbacks along the way. You're always going to get pullbacks, but over the longer term, this market has been moving to the upside. And for the reasons that I've stated a million times in the market alerts, it's the FOMC interest rates decision that's created the volatility of late, but ultimately they have the plunge protection team. They can short the VIX, they can buy stocks, as in Japan they own 70%. The central bank in Japan now owns 70% of the stocks, and this is to stop them from falling. So when I talk about the background of the market and the market, they want the market back in the highs, is to give that perception of the economy doing well. When you look at the Baltic, the debt and everything else, we know that this is not the case. So you are going to get corrections along the way, and that's why in the smaller time frames we get the short signals to take advantage of them. But you'll see here where the market moved higher on Friday, back to the upside as the plunge protection team came in, and this has been a prevailing pattern that we have seen for an awful long time. But you will get short trades, and we've also seen how the power of the 200 bar moving average, prices moving lower, they find support, they trade sideways, they then break back above, and we see prices moving back to the upside, and once driven through the 200 bar moving average, they continue as well. So the market ebbs and flows, but the success that you will have in trading, your starting point has to be the larger time frames. And what you see there is we have a serious bull market in this, a manipulated one at that. However, if you try and go short against these major trends, you might as well stand in front of an express train, because you will get the short trades for some time, but you've got to keep in mind that no doubt going forward the Fed are going to reduce interest rates. This is going to be a catalyst for the market. We've already seen Powell switch from being hawkish to dovish, and also saying that there's likely to be no more interest rate rises going forward, and if there is, there's only going to be one more, trying to normalize to get the balance sheet down on the Fed's balance sheet down as well, which is not working very well. So yeah, I mean, at some point it's all going to fall apart, and it's going to move to the downside. There's no doubts about that. But at this point in time, you can see what they're trying to do, and that's to keep this illusion alive that we have a strong bull market in the Dow. We know it's been funded by QE money, and they're going to do their best to try and keep it on the highs. See the market's gapped up on Sunday evening, and has moved down to the 200 bar moving average, no surprise, and the DP level predictable as ever, and now prices have bounced back off this as well. So always keep in mind, this is your starting point, and that's why I always look at the daily chart. I will look at bigger time frames as well, so you can see exactly where you are. Trying to trade against the trend is just financial suicide, and it's the key to trading is, as the automatic trading signals show, is that you have to go with the flow of where the money is, and it's as far as the stock market's concerned, that has been to the upside for the last 10 years plus. Meanwhile, talking of money moving into markets, on Saturday, out of the blue, we see a move to the upside in Bitcoin. This has traded to the 76% retracement. Was this short covering? It certainly isn't new buying, and the reason I say that is because we see the market trading sideways and overnight lower. So it looks like somebody was getting out of a short position when it was quiet during Saturday there. Okay, that will do it for this one. If there is anything to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.